Good morning guys, and welcome back to the FFX Academy. My name is Thomas, and today we are going to be analyzing gold simply by using our mobile. As you can see in the background, I'm currently away for the weekend learning how to sail and hopefully get my sailing license. I didn't bring any laptop with me for the weekend, but I have my mobile on me, so it allows me to do the weekly analysis and forecast videos simply by using my mobile. Now I received so many questions and messages from you guys asking how many screens do I need for trading, what kind of setups do I need for trading, do I need to buy expensive stuff, you know, for setups or screens or whatever. And the reality is, guys, you do not need any kind of expensive setup, so you don't need 4 screens just to start trading. So let's see how we can analyze the gold today simply by using our mobile. This is the FFX. Okay, for this video we're going to use TradingView for mobile. I know that many people like to use MetaTrader 4 or 5 because it's available and that's where you trade, but I highly recommend to use TradingView because the built-in functionalities and tools are much more flexible and versatile than MetaTrader 4 and 5, and the charts just look so much better. So we're going to use gold USD spot, and we are in the weekly time frame. And what do we see on the weekly time frame straight away? You can see that the price broke through this bearish trend line around the 10th of May, and since it didn't really retest, so it broke through the trend line and just went straight to 1911. So I would expect some kind of bigger retracement on the market, and therefore we are going to use the Fibonacci to identify key support and resistance levels, because if you look left on the chart you see that there is one support and resistance levels at 1783, but I think it's way too low and the price won't come down to this low. It may come to retest 1800, but let's see what do we have on the Fibonacci. So use the Fibonacci from swing low to swing high, and you can see that we already have a few support and resistance levels. So the first thing you want to do is mark the 38.2, because that is a known rejection level. So if the price comes back, there is a high probability that it's going to reject this level. So mark the 38.2. The next one is going to be the 50% level, which is at 1796. Now remember guys that we are analyzing on a mobile, so these numbers could be a little bit inaccurate because we don't have that, you know, big screens and flexibility to do a more accurate analysis. But you can see that the 1796 is really close to 1800, which is a round number, a strong psychological number, and also if you look left on the chart there is clear support and resistance. So important thing, whatever the price is going to come down to retrace, you have to watch price action on a smaller time frame. So now that we have that one marked, the next thing we want to do is mark the 61.80, and you can see that if you look left on the chart there is a strong support and resistance in the previous consolidation top, and also we have a strong resistance and support at the 61.80 at 1768. Now I personally don't think that the price is going to come down to retrace this far, but we have to be ready for every potential outcome. So now I'm going to show you the bearish scenario. We marked the bearish trend line, the breakthrough. We had the Fibonacci marking 3 potential entry points. So I think that the price is going to retrace, breaking this bullish trend line. It's going to retrace to either one of these levels before it continues its way to the upside. So next thing you want to do is go down into lower time frame, for example the daily. In case of a bearish scenario, if the price breaks this bullish trend line, it's going to break the trend line, come back to retest the trend line and the support and resistance, and then it's going to fall down to either one of these levels. For accuracy, let's go down into a more lower time frame, for example the 4-hour. So if the price comes down, breaks this trend line and the market structure, it's really important guys that the price has to break the market structure in order for this bearish scenario to be valid. So price is going to come back to retest either the trend line or the support and resistance level, and when it does, it's going to fall down if it breaks the market structure, the trend line and the support and resistance. The next destination will be 1826, because the price is currently sitting at 1877. So if it falls down to 1825, it is a really good scenario and you can bag some profit. Now if the price doesn't respect the 38.2, the next destination will be around the 1800 area. The next destination will be 1770. I personally don't think that the price is going anywhere lower than that. Now the reason for the bearish scenario, because recently people started to panic buy gold because inflation went up, but inflation is a little bit misleading because the base effect is something that you have to consider. So comparing this year's inflation to 2020 is a little bit silly because last year there was no inflation at all, so the base was much lower than if we were to compare it to 2019. So I would ignore 2020 inflation data because it is misleading. So I think that there will be a bigger consolidation coming on gold, and once the price, just to recap, breaks this trend line and the market structure, is going to come back to a retest, and this is where you want to enter in case of a bearish short scenario. And once you enter and you see that the price is falling, definitely take profit at 1825, and the last one is at 1800. I don't think it's going to go any lower, but who knows. Now once these levels are retested, I would expect price to normalize, because if we are in a high time frame and if the price respects these support and resistance levels, I think gold is going to continue to the upside because we have much stronger fundamentals in the longer term. But for short term, I definitely expect some kind of retracement soon. So if you go back to a daily time frame, this is how it would look like on a higher time frame. Price breaks this trend line, comes back to retest, falls down to 1825, 1800, and then it would continue to the upside. Once it does these moves and once we reach this 1900 level again, I'm going to make a video for the private members so they can be ready for the next move. So this was the bearish scenario, and now let's go into the bullish scenario. So if you go back to the 4-hour time frame, bullish scenario, you can see that the price is currently sitting at the bullish trend line, which we saw on the higher time frame. And if you look left on the chart, you have strong support and resistance here. You also have a consolidation wedge here, so it signals to me that there is something happening at this level. Now how much liquidity could be at this level, I don't know, but if you look at the strong support and resistance, the trend line on the weekly chart, which in a higher time frame, the stronger the bias is. So in a bullish scenario, I would expect the price to respect this trend line, and if I get my arrow tool, I would expect price to respect this and take out the liquidity at around the 1900 area. Now we also have a bullish, big bullish M pattern right here. So if the price respects the bullish pattern, the trend line and the support and resistance, we already have 3 confirmations for a bullish continuation. And if it respects all of these 3 confirmations, the first take profit level should be definitely at the 1800 area. Now this is a nice $25 move to the upside, so it is a really good profit potential. And the first take profit at 1900, the second take profit level would be definitely the previous highs, because if you look on the chart, you see that we had a head and shoulders pattern, so there is a strong resistance level. And just to avoid any bigger correction, take profit at 1900 and then 1913. Now there is no point to continue any further because it's already a $30-40 increase, and once the price hits these levels, I'm going to make a video only for private members so they can be ready for the next move. So just to recap guys, we talked about the bearish scenario, and if I go back on the weekly time frame, you can see that we marked several potential levels. So if the price breaks through this bullish trend line and retests the trend line as well as the support and resistance, the next destination will be 1825 and then 1800. I don't think that the price is going to fall any further below. And once it does retest these levels, then I think it's going to come back for 1900. But let's focus on the short-term scenario now, because it's too early to tell what is price going to do. And for the bullish scenario, if we go back to the 4-hour time frame, you can see that we marked the bullish trend line, this one on the weekly chart. We have a bullish pattern, we have support and resistance. So I think if the price is respecting this trend line, it's going to clear 1915 again very soon, probably next week. Now remember that for the bullish scenario, we need a few things, not just on the technical side, but also on the fundamental side. Fundamentals on gold currently, inflation, and also the supply and demand. But the reason why I expect a bigger fall on gold is because all the wholesalers or the retailers who wanted to buy gold, they already filled up their inventories at a discounted price. So demand is going to be somewhat behind supply. And the other reason for a bigger correction is because if you go back to the higher time frame, you can see that gold rallied since April. So it went from 1860 or 1870 all the way to 1900. And the reason for this is because of inflation. But comparing inflation in 2021 to 2020, where we had the pandemic, it is a little bit silly because the base inflation in 2020 is much lower and almost non-existent compared to 2019. So if we were to compare inflation to 2019, it would be not as misleading as comparing it to 2020. Therefore, we had an inflation worry, and if inflation is going up, people are started buying into gold. But you will see in the next few months as we go into 2021 summer that inflation worry is going to fade away a little bit. It won't go away because 2020 will be all about inflation, but there will be some slowdown in inflation increase. And as soon as the inflation data starts to normalize, we're going to see some kind of drop all the way to 1820. And then as soon as the inflation starts to normalize, price is going to normalize on gold. And I think the price is going to go into the original direction, which is bullish. So we're going to have a small drop and then continue to the upside. So guys, I hope you enjoyed the video. I gave you two scenarios, a bearish and a bullish, so be ready next week. Make sure you watch price action on a smaller time frame. If you get any value out of the weekly videos, and if you enjoyed this particular video, please smash the like button, subscribe to the channel, and leave a comment in the video below. This is the Alpha FX.